Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Thursday. In today's program, I want to discuss the absolute crisis currently engulfing the cryptocurrency market and ask the question, are we witnessing a potential Lehman Brothers 2008 type collapse? But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So at the moment, in the headlines and dominating the market at the moment is an absolute crisis, engulfing the cryptocurrency market. And there is questions, and we'll talk about this openly together. There is questions is whether or not we're about to witness a 2008 Lehman Brothers moment. What do I mean by that? A total collapse. Lehman Brothers collapsed back in 2008 when there was a massive banking crisis in the US, obviously when the financial crisis started, the credit crunch. And like I say, are we going to see the same thing impacting the crypto market? Are we witnessing the beginnings of that? Now, what's happened over the latest developments, the whole FTX saga, is Binance's deal to buy FTX, to rescue them, has collapsed. They have pulled out of the rescue package. And this is what they've had to say. And this is really serious. And this is going to potentially damage the whole market. This is what it said. As a result of corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged US agency investigations, we have decided that we will not pursue the potential acquisition of FTX. Okay, so they pulled out the deal. And this is what the FTX CEO, Bankman-Fried, had to say on this announcement to his staff. I am working as quickly as I can on the next steps here. I wish I could give you all more clarity than I can. He went on to say, I am deeply sorry that we got into this place and for my role in it. That's on me and me alone. And it sucks. And I'm sorry. Not that it makes it any better. Now, apparently, apparently, it's been reported by Bloomberg that the Department of Justice and the SEC are reported to be looking into the turmoil and officials. That's big. That's potentially big. They are yet to comment on it when asked. But if this is true, then this is extremely, extremely big. FTX suffered $6 billion of withdrawals over the last 72 hours. And it's now being reported that the FTX needs emergency funding to cover up to $8 billion of withdrawal requests, signifying basically that FTX is basically on the brink of bankruptcy. So yeah, this is huge. So the knock-on effect, obviously, is affected the whole crypto market. All the cryptos have come under pressure. Bitcoin, the crypto king, the one which dominates everything and which led this whole industry, is actually currently trading at a 2-year low. And in fact, it's not just this. This is one of the incidences which is going to obviously highlight how fragile this market is. Don't forget, cryptos have suffered in general this year, where the markets have gone out of riskier assets. And so far, like I say, the crypto king, Bitcoin, is down 60% so far in 2022. And JP Morgan, they predict that if this crisis continues, it could push Bitcoin down to $13,000 level. Okay, it's currently trading, we'll look at it in a minute. It's currently trading at 16,662. So they reckon if this crisis continues, it could kick Bitcoin down even lower. So this is something which is really engrossing the market. The market in general, though, like I say, and we'll have a look. We'll talk about this. Talk about it openly. Are we witnessing a Lehman Brothers moment? The cryptocurrency market has fallen by 2/3 this year from its peak of 1.07 trillion. So this is extremely Well, this is a question. Who can cover the emergency funding that FTX needs? Originally, it was going to be Binance. They were going to buy them out and rescue them. But they pulled out on the deal. And I don't think anybody, if it's true about the Department of Justice and the SEC looking into them, nobody's going to want to touch them because clearly there is something wrong there. If this is true, and like I said, I think more or not the market's telling investors prepare for FTX to go bankrupt. There is no one to cover that funding. It's not like, and again, this is going to pull me, I'm going to come to the point which I wanted to talk about. Great question, by the way, David. Thank you for that. And great to see you, my friend. Hope you and the family are well. But yeah, great question, but I don't think anybody can. And anybody will dare if the Department of Justice and the SEC are definitely looking into them. But that leads me to my point. This is different from the banking crisis, okay, where our government, the federal government, managed to bail out most of the banks. They sacrificed Lehman Brothers. But they managed to bail everybody out. No government is going to bail out a crypto exchange. No one's going to touch it. And obviously, this is going to cry again for more regulation. And don't forget, the whole point of crypto was to avoid regulation so much. Get away from it or keep away from it. Hey, buddy, how you doing? Good to see you. Hope you're well. Nice to see you. Like I say, so nobody is going to be able to do it. Is this, and like I say, we're going to have a look at the crypto Bitcoin in a moment. The question is opening: is this the beginning of the Lehman Brothers? It's not the end. To put it this way, I think this is going to be more volatile, as it underlines again how risky this market is, and while there is certainly not certain guidelines and protection in place like other markets. So it's going to underline that threat that this is not a very particularly safe market. It's high risk. But like I say, a collapse of the whole market, I cannot see. But this is a serious, going to have serious repercussions, without a doubt. And like I say, we don't have any federal government or any organization to bail out these exchanges. So it's going to be a very worrying time for the market at the moment. But let's have a quick look at the market as it currently stands. Okay, this is the Bitcoin. And don't forget, like I said a couple of days ago, Bitcoin has separated its sort of, yeah, it's a Bitcoin. Bitcoin recovered a bit the previous week, but this week it's lost a lot of power. You see how it goes on the following days. Absolutely, it's actually down 13% this week. 30% it's dropped. And like I say, we'll have a look at it. Good question, though. Very good question. It's actually down 13% this week. And the point I wanted to make is that we've had there was a correlation with Bitcoin and with stocks, S&P 500. So when we had risk on appetite, S&P was flying high. Bitcoin was sort of following it on the risk on appetite, but it's not, we've had several days of gains in the market at the moment, driven by obviously the NFP on Friday and the hope of the pivot or Fed pivot occurring. Bitcoin has separated that because this crisis with FTX has overshadowed everything. And as we can see, like I say, it's way out. This is on a 30-minute. It's under that level. If we go on a daily, we can see where it was range bound for ages between $20,355 and $18,438. Since this crisis, it's way under that. It's now at 16,672. And if we look at a bigger picture, we look at a weekly, we can see, obviously, it has been on, pressure since the peaks of 2021. And like I say, it's beginning to show signs that the market, especially if you're fanatic, then obviously it still has an attraction. But obviously other investors or investor types are now looking at this and looking at the repercussions of FTX situation, as maybe it's beginning to lose its shine. It used to be, like I say, talked about as a brilliant hedge against inflation. But again, it's not being talked about a lot at that moment because, again, the risky side of this market is beginning to really show its face. And I think it's only going to get worse. But potentially, like I say, at the moment, it's recovered from the lows it hit yesterday, but it's still very much way under the levels we saw before this crisis engulfed it. Anyway, on other news, guess what's happening today? Have a guess what is happening today and what will, obviously the crypto crisis today is dictated the headlines, but there's something else coming up, which is even bigger. I think even bigger. Have a guess. Anybody? Okay, of course. It's the US CPI today, Consumer Price Index, due today at 1:30 p.m. UTC. Expectation is for, and this is what the market's hoping for. Fed Waller. Fed Waller is talking as well. Yes, we have got quite a few Fed members talking today, actually. Quite a few Fed members talking today. But that's a very good point. But this is the big one. This is the obviously CPI. Expectation is going to start showing us signs of it cooling down. Now, we'll talk a bit more about this. CPI year on year, expectation is 8%. The previous reading was 8.2. Core, which is the big one, core CPI year on year, expectation is 6.5. Previous number is 6.6. Don't forget, that really put the cat amongst the pigeons when that came out. Now, I had a great question from a Despina yesterday in one of the comments, and they asked, what's my expectation on this? Now, the last CPIs have all surprised us. They come out higher than anticipated. I have a slight feeling that at last we might see signs, indeed, of the CPI cooling down. So I can indeed see it maybe slightly cooling down. I'm expecting a lower figure. 6.5 on core. I'm hoping it could be even lower than that slightly. But that's what the market's anticipating for. But we will have to see, of course. We will have to see. And because this is a big event, for obvious reasons, I'm going to be doing a watch along of this. Obviously going online or going on air at 1:20 p.m. UTC to watch it. Always go on 10 minutes before so we can talk about it, talk about potential scenarios, what could happen if this happened, and as well watch the market as this announcement is made. So please come and join me for that. Remember, 1:20 p.m. UTC. Absolutely, buddy. Of course I can. CPI is obviously a consumer price index, which is inflation. And obviously, if you get a higher reading, then what usually happens is the dollar or the currency in question can get stronger, because one way of a central bank fighting inflation is to raise interest rates. Now, as we know, we are suffering from massive inflation crisis at the moment. Like I say, we're at 40-year heights. And the Fed in the US have been extremely aggressive with interest rates to pull the inflation down. And they're way off their target. Like I said, it's 8.2% was the last reading. Their target is 2%. So they're miles away from it. So this announcement, if it comes in a lot higher than anticipated, then what we could potentially see is initially dollar strength against the majors, and maybe a dip in the S&P 500. If it comes in lower, though, which a lot of people are expecting it to start cooling down, we could see the opposite. We could see dollar weakness, risk appetite with the likes of euro and sterling, and the S&P 500 obviously getting a boost along with gold. So that could be the outcome of those. But we're going to go in a lot more detail on those outcomes on the watch along. That's why I always go up on 10 minutes beforehand. But great question. Great question. Anyway, let's have a quick look. So don't forget, tixee Live watch along, 1:20 p.m. UTC, US CPI could potentially be massive. But let's have a quick look at the markets, how it currently stands, because at the moment, obviously, we are seeing the market bracing itself. Euro is back under parity once again. Lasted long, didn't it? Currently trading at 0.9966. Like I said, we've seen a little bit of dollar strength over the last hour or so as the market's getting itself positioned for the CPI. The sterling is the same as well. Way under now that 100-day moving average, okay, which is currently trading at 1.1382 dollar yen. It's pretty much range bound again. Not much movement on this pair in particular, as you can see on a daily. We've got on that uptrend now. It's going to be range bound for a while now, and we have to see how the CPI comes in on that. Gold I want to look at, because gold is looking interesting. Okay, gold is still pretty sideways. If you look on a 30 minutes, it is sideways. Okay, it's currently trading at $1,706. Okay, However, we look on a daily, I can see a potential key area here. This is on the 100-day moving average. A potential level of $1,716.50. That level is looking a bit difficult to crack. So it'd be interesting to see where, keep an eye on that level, because that's definitely a potential area of interest. In fact, like you say, no problem. Absolutely. Thank you for the question. I mean, look, it all depends. It all depends on the reading. Okay. If it's higher than anticipated, well, there's no signs. Well, say if it comes in as anticipated, even 8% and 6.5 on core is still really high. And don't forget, the Fed has done 4 75 rate hikes in a row. So, and there's rumors that they might do 50 in December. So the inflation is just not coming down quick enough. If it's not coming down quick enough, then we could see that impact. But let's see. But that's a really, really good point. It should be exciting. I'm hoping it is. Because obviously, often happens if I build it up and then it turns out to be really boring. But anyway, my point with gold, I'm quite interested, keeping a close eye on that level, because it looks like a potential tough level to crack. After that, then the other key potential area, which I'm keeping an eye on, potentially area of interest, is $1,726. But like I say, we're all going to have to wait for 1:30 p.m. UTC. Other events to come up is all going to be overshadowed by today anyway. We have US initial claims, which does come out at the same time. Tomorrow, UK GDP, which will be interesting for those sterling traders out there. UK manufacturing productions, German consumer price index, and US Michigan consumer sentiment. European equities, as they currently stand, FTSE is slightly in the red, negative 0.05%. DAX currently trading in the red as well, 0.20%. And Euro stocks currently negative 0.21%. Don't forget, like these fine individuals have been asking me questions. You can ask me questions anytime you wish. Well, share me your opinion, or let me know what you're trading, what you think, or even simply say hello. You could do that as well. Don't forget, as well as that, if you think of a question later, you could put it in the comment section, either on YouTube or Facebook. I will see them, and I will reply to them next time I go live on air, which of course, will be 1:20 p.m. today, UTC, for the watch along. Okie doke. Well, okay. Well, if there is no questions or no more questions, big shout out to Ruler, LD David. Thank you ever so much for questions and interacting. It's all part of doing a live broadcast. It really makes a difference. And of course, a big thanks and shout out to all of you for coming to watch. So anyway, till next time, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this little video, found it interesting and insightful, and you put up with me, my over-the-top enthusiasm for the markets, which I simply cannot help, then give me one of those. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. So I always suggest you do your own research, do your own due diligence, and of course, there are the risks at hand before entering any trade. Till next time, every single one of you, trade safe.